G'day folks, welcome back to Pete's Investing. It's January 11, 2024. This is the natural gas technical analysis. Also looking at some ETFs and shares, including BOIL, UNG and KOLD. And stay tuned to the end of the video. We'll be covering some macroeconomic views in terms of where nat gas are going. So here, for those new to the channel, we've got the weekly, daily and hourly. So not much has changed since yesterday's update. We're still stuck in this range, but ever so slightly increasing price range on the commodity price. Now, first off, on the weekly, you can see here on the CCI 400, it's moving pretty much sideways, very slightly bullish. The CCI 150 we use as a divergence indicator, and back here you can see there it fell off according to the CCI 150 versus higher highs in the price, and it fell off the first time there, and then the second time there, and it actually retraced beyond the 100% level. And currently it's trending in line with the price action on the CCI 150. The daily chart is showing a similar bullish movement on the CCI 400 and also bullish on the 150. Again, there's no divergence to talk of. There was a bearish divergence back here where the price fell off in line with the CCI. On the hourly, we're still stuck in this channel, and it's still rising ever so slightly. But notice we did have a few, going back a bit, we did have a few bullish divergence back here, and it actually retraced and hit our targets. And more recently we had a bearish divergence here, fell down, hit our target, and that target area is a 23 to 38% level of that Fibonacci range. Now you'll notice the CCI 400 is falling off again, and the CCI 150 is also falling off, but making new lows. Just be careful of the price action. We may see a bit of a decline shortly, possibly, but that will depend on how this performs in the coming hours. On the other charts, we look at ProShares Ultra DJUBS, and that is ticker BOIL. You can see it on the weekly, it's still bullish. On the daily, also bullish. No sign of a pullback on the CCI 150. However, on the 1 hour chart, it has hit our targets on these Fibonacci bullish divergence levels, and it's now pulling back. Now just be mindful as well on the 1 hour chart, it's actually just short of the 61% level. If it breaks higher than that, we're going to see further rises in the price. So at the moment it looks like it's pulling back, and it may well drop further, but notice the CCI 400 is still rising. On the United States Natural Gas Fund, and that's ticker UNG, that's showing a bearish outlook on the CCI 400. No divergence on the weekly. The CCI 400 on the daily is rising and making bullish movements, and that's showing again bullish on also on the 150. Again, no sign of divergence. And on the 1 hour chart, bullish movement on the CCI 400, and it actually has penetrated beyond the 61% level on this particular chart. So just be mindful. We may see it bounce down from there, or it may actually break through higher and go even higher. The proof of that will be in the daily chart, especially if it breaks below this level on the CCI 400 and the 150. And lastly, we look at the ProShares Ultra Short Bloomberg natural gas price, and that's ticker KOLD. The CCI 400 on the weekly is breaking to the downside, so slightly bullish. The CCI 400 is also bullish, bearish, I should say, bearish on the weekly and bearish on the daily. You can see there is penetrated the 61% level on the daily, so we may see further declines. And on the hourly, we're also in a declining pattern. So again, it's bouncing off the 61% level at the moment on the hourly. So what we have now is some key factors affecting the natural gas prices. So just be aware of supply, and that's global LNG exports, which impacts the domestic supply, especially in the US, production levels, fluctuations in major producing countries, storage levels, do obviously have an impact on price stability and winter preparedness. Then also looking at, as well as supply, looking at demand. That's weather patterns have an impact, industrial demand, and competition from renewables. Also, other factors are geopolitical risks, so the Ukraine war, for instance, international trade and sanctions, and also the economic growth with strong growth, potential for increased extra energy demand and higher prices, and global slowdowns for decreased demand and lower prices. Just be aware of also the data sources shown at the bottom of those two slides. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.